Yes, is there a little gloom in your life? Is there some doom coming to those invested in stocks, bonds, and even commodities? Well, let's find out. We've got the publisher of the Gloom, Boom, and Doom Report, MARC FABER. He joins us from Vancouver, Canada. MARC FABER, good to have you with us on Bloomberg.
It's my pleasure.
So, MARC FABER, I was reading today a report about how Germany has moved a vote on the European Financial Stability Facility from September the 23rd. It's going to be now a week later. Is politics in Germany driving a decision on European debt?
Yes, I think that politics and business have mixed all over the world, in particular, obviously, in Europe and in the United States. And it looks increasingly to me that it will be a political decision whether Germany will essentially back euro bonds, because without the backing of Germany, there won't be any euro bonds and there won't be further bailouts.
Do you think that Germany will eventually back euro bonds?
As I said, it's a political decision, and I'm not a politician. My sense is that it may back euro bonds against the will of the people.
Do you think that the leaders in the EU just don't understand the gravity of the situation?
No, I think that a lot of people in Europe are very skeptical about Keynesian interventions. And I'd just like to mention that recently a university professor in the United States, who is very well known, Robert Barrow, wrote an article in the Wall Street Journal entitled Keynesian Economics versus Regular Economics, and he criticized very heavily the continuous interventions by governments that distort market prices and the clearing mechanism.
Well, having said that, MARC FABER, you must have read the comments by Christine Lagarde, the new head of the International Monetary Fund. She was speaking in Jackson Hole, Wyoming, calling for a recapitalization of some of the weaker banks in Europe.
Well, I think they tried to recapitalize before, and for sure they have to recapitalize them massively. I mean, not a little, massively. And where the capital will come from is very questionable. All I'm arguing is it would have been better 2 years ago to let Greece fail.
Right.
By supporting it, you have now created additional problems that are magnified. Each time you postpone the end solution becomes more costly.
What is your take on the future of the euro?
Well, I think it will survive, but the question is, will it survive and be a euro of just France and Germany and maybe 2 or 3 other countries, and the other countries will leave? Or will it survive as a euro of the weak countries, and will Germany leave? That is the big issue.
Well, MARC FABER, you've certainly noted what China has been doing in terms of its buying of the euro. It wants another reserve currency other than the U.S. dollar. Will China end up saving Europe?
Well, I doubt. I think that the Chinese bought euros, as central banks frequently do. They buy the currency which has been strong instead of the currency that will be strong. And relatively to the euro, I think that the U.S. dollar is probably the better currency for the time being. But maybe the Chinese buy the euro in the hope that the euro will survive as a currency of Germany and that the weak countries will exit the eurozone.
MARC FABER, you titled your most recent Gloom, Boom, and Doom report, Honest and Dishonest Money. Explain what you mean by that.
Well, I think that everybody knows money has different functions. One of them is obviously to facilitate the exchange of goods and services. The other one is to be a store of value, and the third one is a unit of account. And I think that with zero interest rates and cost of living increases in the order of 5 to 10% for most families in the United States, money as a store of value is no longer existent. And that's what I mean by honest and dishonest money. And if you look at the monetary base, how it's grown since the mid-1980s, and especially if you look at M1, that recently has reached a growth rate that is the highest in 35 years, then you ask yourself, what will ultimately the value of paper money be?
Now, you said the Treasury market is a disaster waiting to happen. Explain more.
Well, I think we had a bond market rally that began on September 21st, 1981, and my view was that it had ended on December 18th, 2008, when the 10-year Treasury note yield touched 2.08% and the 30 years 2.53%. But recently, the 10-year notes made a new high. In other words, interest rates fell briefly below 2% on the 10-year note, but not on the 30 years. The 30 years never went back down in yield to the lows of December 18, 2008.
Marc Faber, in this edition of the Gloom, Boom, and Doom report, there's a lot of information having to do with moral decay. And one of the things I thought was most interesting was a little excerpt from something written by Henry Kaufman in 2008, where he basically described this balance that financial institutions must maintain, the balance between their own private interests, their desire to make a lot of money, and their broader social and fiduciary responsibilities. Do you think that the imbalance that he describes, that the imbalance came about because the whole incentive structure, the whole compensation method is out of balance, that you don't compensate people for doing boring, conservative, relationship-based, long-term banking, but you compensate them on creating the next, supercomputer?
Well, I think that's a good point. But obviously, what happened is the removal of Glass-Steagall and also the bailout of LTCM in 1998 essentially gave a green light to financial institutions that they could leverage up. There would be a Greenspan put and later a Bernanke put, and basically they became huge and badly run hedge funds, leveraging up their balance sheets, like now the Fed is also hugely leveraged. And I think we have had, as we started out, this mixture and combination between politics and business. And it's as Anne Ryan said, that basically you have, when you see that men get richer by graft and by pull rather than by work, and your laws don't protect you against them, but protect them against you, and when you see corruption being rewarded and honesty becoming a self-sacrifice, like Mr. Ron Paul, he is looked upon as someone, an oddball, because he's honest. And I think that's where we have reached, and this society, in my opinion, will eventually end up very badly, because normally a crisis purges the system, but this crisis of 2008-2009 has actually made the system much worse and much more corrupt.
So we're just going to go back and watch Gary Cooper in Atlas Shrugged, the movie of Ayn Rand's. I'm going to say maybe if they do us another version of that, Marc Faber, I'm going to vote for you to play Gary Cooper's role.
Yeah, well, maybe. But all I can say is I've worked on Wall Street for 40 years. And I'm not saying that the previous generation was much better than this one. But very clearly, an atmosphere of enormous greed has crept into the financial markets, and to be safeguarding the interest of the client, the fiduciary duty of a financial institution, is no longer a top priority.
Is it so much easier to skirt the rules now?
I beg your pardon?
Is it easier to skirt the rules and not really have to deal with the rules that are on Wall Street?
You know, recently Matt Taibbi wrote several articles in Rolling Stones about the SEC and lately also about the battle between the administration and the Attorney General of New York, Eric Schneiderman, and so forth. When you read all these things, you have to scratch your head. Something is terribly unethical in the system.
Marc Faber, if someone came to you and said, look, I've got $100 million to invest right now. I want to save my money. I would like to make a little bit, but I want to sleep at night. How would you recommend they allocate that?
Well, I think it's very important to maintain diversification. I would advise him to be 25 to 30% in equities, with a large portion in overseas equities, in particular emerging economies. I would advise him to hold some gold, 25% or so, whereby I think that for the next 6 months, gold will rather decline than go up. And I would hold some cash and bonds. And then I would own maybe 25% in real estate.
Now, with gold, are we going to see a violent correction when we look at the price?
Well, I think we already had quite a violent correction. But I think we probably peaked out above 1,900. We're now down $46 today at 1781. I think it would not surprise me to see gold down to around 1,600, because recently there has been maybe a little bit too much enthusiasm. At the same time, what is interesting is that gold in this latest bull market started to rally at the end of June.